please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, very good morning. Watching Trading Hour on CNBC TV 18. I'm Ekta Patran. With me is Prashant Nair. Well, it's turning out to be a bit of a weak session for us. We're just about hovering, trying to sustain 10,500, down 35 points for the Nifty. And we have the mid-cap index, which is just about flatlined at this point in time. Lot of stocks to talk about. State Bank of India, Cipla, HPCL, in fact, all of the OMCs, Tata Motors, Stride Shasun, lot of stocks on our radar, which we'll be discussing over the course of the show. Hi, Prashant.
I think the story so far, Ekta, I mean, Monday, Tuesday, and today is PSU banks. I mean, the PSU bank index itself, I think, is up about 7 or 8%. And this is just Wednesday. So you got the rest of the day today, and you got the next 2 days as well. I don't know if you can put up the week-to-date chart for the PSU bank index, but that will show up what I'm talking about. Of course, you know, it's nothing compared to, it doesn't come up to any meaningful retracement levels so far. I mean, so it's not as if it's a reversal in trend or anything. We've seen the story play out before. Reversals are sharp, swift. It looks like another move is starting, only to get sort of faded once again. But I mean, those moves, when they are large enough, are tradable and very juicy. So keep an eye out on that space. Otherwise, I mean, on the broader markets, there isn't very much. And this week has been that way. 52 points lower. So on the Sensex, and about, what, 35 odd points lower on the Nifty is where we stand. You know, apart from PSU banks as a sector, I mean, I really can't spot another one worth a mention. On the downside, you got metals, which are lower, about 2%. You got the energy index, which is down 1.2. Oil marketing stocks, after being flat the last couple of days, are actually giving way quite a bit, 4-5%. Of course, they've got numbers to boot, but that's about it. So you got metals and energy, which are under pressure, and PSU banks on the other side, which are looking pretty solid. I think we've got Sudarshan Sukhani joining in with a quick take on markets from s2analytics.com. Sudarshan, thanks very much. Your sense of things and whether we see this leg down becoming bigger and more, I mean, faster as well.
Yeah, good morning again. Well, I have already explained that we are in some kind of a downtrend. The intermediate rally that we had seen is done and over with. That was the high we made at 10,930. The view is that this market will slowly slide down. Now, on an intraday basis, it's difficult to say whether the slide will come today after what we have seen till 11 a.m. or whether we'll have choppy markets. But traders should be positioned on the short side. The best way to do this is to buy 10,600, 10,500 put options for June expiry, because May is now coming to an end. So have this patience, expect this market to slide first to 10,000 and then probably much lower to 9,500. This is the scenario for the next few months. For today, markets could remain choppy, move up and down around the 10,500 level. So at current levels, intraday trading in the Nifty doesn't give any benefits. We have to step aside for that.
Okay. Sudarshan, hi, morning. If you are anticipating a possible correction to 9,500, maybe in a medium-term perspective, what kind of stocks do you think will probably lead it lower? Would it primarily be from the banking space?
It'll be banks, financials, and unfortunately auto also. Auto stocks are now giving signs of big distribution patterns available there. So IT could buck the trend as a matter of relative performance. I think apart from IT, all the sectors are likely to participate. Banking and finance will lead that decline, and metals and auto should be the next in line.
What would your stocks for today be?
Well, that was a little sort of disappointing and pessimistic, so we'll be a little more cheerful now. IT, see the mid-cap IT space is flaring away. It's least bothered about the fact that the markets are down. We have given up 400 points and whatever else. So that's a space to be in. Mindtree is the buying opportunity as we speak. And actually, you could look at other IT, mid-cap IT stocks also, large-cap IT stocks also, and be a willing buyer. As of now, I'm suggesting Mindtree for buying. The rest of the stocks have to be short selling in mid-caps. Hindustan Zinc from the metals pack, metals is on a weak wicket today and likely to remain so. It's not just about Sterlite or Tuticorin, it's generally the trend in metals is now weak. For the day, I'm suggesting going short in Hindustan Zinc and M&M Financials from the NBFC space. These are two spaces which are likely to remain weak.
Okay, we've got some questions, so let's actually take time. Let's take one. We've got a little short on time. Abhishek has 50 shares of Bosch. He's paid 15,000 rupees each for them. He wants to know the way forward on Bosch. Sudarshan.
Well, Bosch is finding strong support in the downside. Hold on, be patient. You will be rewarded in the next few months.
Okay, all right, Sudarshan, we'll let you go on that note. Thanks very much for joining in, taking us through those strategies. We have Yogesh Mehta of Motilal Oswal, who's now with us. Yogesh, hi, morning, over to you. If you could quickly run us through your strategies.
Yeah, sure. Since markets are on a choppy note, but still there are some stocks which can give a positive bias return. So we are on the long side right now. And the number one which we are recommending is buy on Tech Mahindra IT sector. Current price is 700 rupees and 695 was the earlier multiple resistance which has been surpassed. And keeping a stop loss of 685, go long, and target could be in the range of 730 rupees. The other one is on a buy side again is Tata Motors. Today it is quoting at 314 and target could be in the range of 323 to 324 rupees, keeping a small stop loss of 310. And the third one is Shriram Transport Finance. 1459, 1460 is the current price in future, keeping stop loss of 1442. Target could be in the range of 1490, 92 rupees.
Let's get talking to the management of Healthcare Global. It's marginally under pressure today. The company reported what was steady revenue growth of 22%, but the margins were quite subdued at 14.5% odd. Mr. B.S. Ajay Kumar, the chairman and CEO of the company, now joins in. Mr. Ajay Kumar, if you could start by just breaking up the performance of your cancer center business as well as your fertility business.
Yes. I think as you can see, we have grown significantly year on year, almost 19% growth in our revenue. And we have also had significant growth in our new centers, which is coming up across India, particularly in our Mumbai center has started functioning now. And we have centers across even in South Mumbai, which is coming up in few months. And so we have a good, healthy, looking forward centers also growing. And we will continue to think, I think we'll see the same kind of growth happening in the coming year also.
Okay. Can you tell us what the losses were in the new centers this quarter and what might your guidance be on the same?
Yeah, we are normally not giving any guidance. All I can say is some of our new centers which have started are ramping up better than what we anticipated. For example, as I've in the previously indicated, our Borivali center is doing extremely well. Within the 6 months, it has grown significantly. Normally, we expect the EBITDA break-even to happen in 12 months to 18 months. I think even though the rent is very high in the Bombay area, still we think we'll break even in the set time. Similarly, our Nagpur center is doing good. Our Nasik center, which is expanding very well, has grown to nearly 220 beds with a significant growth. A similar trend we are beginning to see also in our Andhra Pradesh, where Vizag and Vijayawada are also doing extremely well. So all our centers, new centers, are doing as expected, and the mature centers are also growing at 12 to 14% as expected. So the growth pattern is good. Our margin is primarily, as you mentioned, was slightly lower because of the new centers. But when you take the existing centers margin only, it is still healthy at about 19.7 centers, better than the last year. So the mature centers are doing extremely well. The new centers obviously will bring down the margins for a period of time until they break even.
Mr. Ajay Kumar, could you tell us overall what has been the average revenue for each bed? Per bed occupied, and how does it compare to, can you give us the figure, and can you compare that to last quarter and the quarter last year?
Yeah, our ARPOP, which is average revenue per bed, is around 30,000s. But again, we have to separate it out between the centers in Bangalore or Mumbai compared to tier 2, tier 3 cities, because we are not only in big cities, we are one of the few oncology centers across. We are spread to tier 2, tier 3 cities also. But in the tier 1 city, it is upwards of 45,000. And in the tier 2, 3 cities, it will be in the 15 to 20,000. So average comes in the 30,000s.
Okay. Mr. Ajay Kumar,
And,
can you... Sure,
as we know very well, in oncology, a lot of the work is most of the work is also outpatient work. More and more, our A loss is coming down, which I think is a very healthy trend.
All right. There's a lot of talk about possible price control, more price control measures which could be initiated in the hospital space. We've already seen some of it being implemented. Do you fear that this could probably impact your business going forward?
Yeah, so far, in oncology space, we have not seen any impact. The only impact which has happened is in the pharma price, where the maximum retail price has been brought down for so-called essential drugs. But what I want to say here is, in India, when we compare to the global standards, we are the leaders in value healthcare. And that means for the amount of dollars we spent compared to the outcome, quality we provide, we are the leaders in the world. It is indeed sad that government is thinking of putting some price pressures. This will definitely bring down the quality of care and outcome. What the progress has happened in the last 15 years will go down the drain if government starts to take these measures. I think the government putting price pressures is really not in the right direction. It is not for the quality care. Cheap medicine is different compared to quality care or value-based medicine. I think it is high time we start focusing on value-based medicine rather than cheap medicine. Value-based medicine is where we get better outcomes. Imagine a cancer patient who comes first time, gets the right treatment. This patient will get better outcome, and in the life cycle of the patient, he is going to spend less compared to getting cheap medicine and having multiple outcomes. So it is high time we start measuring the outcome on the patients rather than talking about price control.
Fair enough. But I guess, it's also an issue of affordability, right? To get to that, to get that right treatment the first time, it's out of reach for a vast majority.
No,
so I guess
affordability first.
As you're saying, there has to be that balance.
No, affordability. Tell me one thing, which part of the world does a CAT scan for $50, gets an MRI for $110, PET scan for $325? Nowhere in the world. We have been to Philippines, South Vietnam, Africa. They are all 2.5, 3 times more expensive than India. So, but, because we have brought such technology, that is why the cost has gone up. If you have brought inferior technology, naturally the cost will be gone. When I came back... when I came back from US after 28 years of practice, the shocking thing was the cost is so low and we're getting so. That is why Harvard Business School and all have written articles about us. Low cost healthcare with good outcome. It does mean something,
Oh, yeah. Oh, absolutely. And we have...
and you look at the EY report. I hope you have seen the EY report, where they have said most of the hospitals are suffering. Their ROCE is not even 6%.
Mr. Ajay Kumar, thank you very much. Good speaking with you. And, we can... it's a very interesting and vast topic to delve into, which we can do later, separately. Thank you indeed. All right, let's bring in Manisha now with a quick check on what's happening in the world of commodities. Manisha, what are we focusing on?
Well, crude, Prashant, can't get away from that because the prices have been holding firm. But the important thing is that you have a couple of important key events now coming in, which could perhaps decide on what stand will the major oil producers be taking from here on. So we have seen nearly 7-10% of decline come in for Brent, 0.5% decline for the US crude. And this is on the back of reports and suggestions that the OPEC actually could change the course on what they have been working on since January 2017. But before that, remember the key oil ministers, the key oil companies like BP, Shell, Total, etc. are meeting in Russia in this week, and they will have a conversation on the global crude supplies, concerns, and the prices that are trading around that $80 per barrel mark right now. And then comes the OPEC meeting just a month after, on June 22nd, to review the state of oil markets in the global space there. Well, there is expectation that the OPEC will adapt to new metrics to measure the agreement's success. Also, because the OECD commercial stocks are now below 5-year average, and that is exactly what OPEC had begun to do. And if you look at the OPEC compliance, that stands at a record 180% for the month of April, has been much on the higher side. So OPEC clearly has some space right now to ease off those production cuts. You also have seen countries like Venezuela, Angola, Nigeria, potentially Iran. Supplies have been coming off from all of these countries. So OPEC, there's an expectation that OPEC will allow the spare capacity nations to actually come ahead and increase supplies. And that's exactly what has led to profit taking, trading below 79 actually for the Brent prices right now. Prathamesh Malya of Angel Commodities now joins us to talk more about that. Prathamesh, hi. A lot of changes now in sense of crude as we have been seeing in last 24 to 48 hours. What is your sense? Finally, some time for correction now?
Morning, Manisha. Yes, the set of factors that you just mentioned clearly outlines that it would be possibly an easy exit for the compliance that OPEC has set it for itself. I think Iran, Venezuela getting out of business with supplies is really a good win-win situation for spare capacity countries like Saudi as well as Iraq. So I think they will possibly pull out some more oil, and the disturbance that's been happening in oil markets with regards to supply can be easily taken off. So I think we'll possibly witness a correction as far as WTI goes. I think 10% it has rallied in past 1 month or so. I think the possible correction can possibly extend towards 67, for that matter 65 for WTI. And rupee terms, it translates out to around 4,500, 4,600. That's a steeper correction, but then immediate near term I would be bearish on oil. I think 5,000 on the MCX is quite a resistance point. I think I would be seller on oil at higher levels. The target points would be around 4,900 immediately, and then if it takes off, I think 4,800 seems to be there on the cards.
A word on the metal space as well, because almost everything is trading in the negative. Iron ore prices are down by 1.5%. Steel is trading at a 5-week lows. Copper has come off its 1-month highs that it was trading on yesterday. What are you watching out here?
I think for copper, I think increasing inventories on the LME is something a cause of concern. Besides 475 on the MCX is what it is trading at, which was the previous high point. I think you will see some bit of correction as far as copper goes. A little bit of a caution on this metal. While you rightly mentioned iron ore and steel prices have taken a hit in the recent trading sessions, I think the next possible correction you would see on nickel, because these metals are directly correlated to what is happening in iron ore and steel. So I think the rally in nickel should possibly halt. I think 960 on the M6 is what we're looking at as far as nickel goes. While immediate near term for copper, 477 looks to be there on the cards, which is quite a resistance point. But a note of caution as far as copper goes if you want to go long on this metal.
Okay, all right, Manisha. Thanks very much for joining in and taking us through all of those commodity strategies. Just want to point out one stock, Stride Shasun. That stock is now up around 8.5%. It's off the high point of the day, but nonetheless, it's been a good rally for it in the past 2 days. If you put it into context, the stock is still corrected 33% on a month-to-date basis, almost 50% year-to-date. But maybe there is some amount of fund buying which is keeping the stock quite active today as well.